Chad, thank you for doing this today. Where are you located?
John, I'm in Austin, Texas.
How's the weather down there today?
It is crappy. It is 40 degrees and raining. This is not why we moved to Texas.
I hear you. Where's home originally for you?
I've been here for almost the last decade, but before that, it was Southern California.
Got it. Got it. Got it. A lot of changes in Austin in the last 10 years or so, right?
Yeah, it's been great to see. You love seeing kind of a city grow up, and we've adopted it as well. They've adopted
Yeah.
us, so it's just a fabulous city. Downtown is not too far away from us, so we go down there quite often, and it's just a great place to kind of feel the vibe and be able to be part of it, the growth.
Well, that's great. That's great. So, tell us a bit about your background and your journey and the firm that you've got today and the kind of things that you're looking for.
Yeah. So I come from a fintech background, former CFO slash CEO of a couple different fintech programs, and then sold a couple of those, and then now decided to try to figure out what I'm going to do when I grow up.
Right.
And we kind of looked at a whole bunch of different industries, and did a whole bunch of analysis to kind of figure out where we wanted to be. And we kind of located on two that we thought had some promise and might be good through the next couple decades of growth in our country. And when one was medical and the other one was like home and commercial services. And so medical, that's highly regulated. I have no idea. Like there's specializations you need there that we kind of quickly ruled out that kind of wouldn't be a good fit for us. But so then we kind of looked at to home services slash construction,
Hmm.
and we loved it. Like all the traits and attributes we were looking for inside of industries was there, and plus it's a little bit of my passion anyway. I love building things, and so we doubled down there and started looking at companies.
So when we think about home service companies, that covers a lot of different sort of subsectors under that broad umbrella, both inside and outside the home. Are there any specific ones that are of particular interest?
Yeah, I'd probably even focus it down to trade services. So
Okay.
electrical, HVAC, and plumbing were the three that we kind of narrowed into. And then, once we got into that and we started narrowing into those different fields, we realized that there's two different things. There's new builds and
Right.
there's existing service.
Right.
And I'll tell you, existing service, while great from a seller standpoint, right, wasn't great for us because we're kind of cash flow buyers, and so the multiples on those are obviously being driven up by the many PE firms who are trying to do roll
Right.
ups in those areas. And
Right.
so we quickly pivoted and said this is just not for us. So then we kind of went towards new construction, and then we found commercial construction, and we thought, man, this is a great field, lots of growth in building in Texas. And so, mainly hit that pretty hard and then found a great plumbing company here in Austin, Texas that does business all the way from San Antonio all the way up to Dallas Fort Worth.
Well, that's interesting because you're sort of doing the opposite of what a lot of the larger PE consolidators are doing that are really specific, focused on that service and maintenance replacement part of the business. You're not afraid to take construction project oriented exposure in businesses that you might be interested in. Is that right?
That's correct. Because we're kind of a different investor than a normal private equity shop. So a normal private equity shop is looking for a couple things. Number one, it's return on assets and also it's return on purchase price.
Hmm.
And for them, and scalability, right, which kind of goes into a working capital calculation. And
Hmm.
so all the construction kind of doesn't fit that mold because in commercial construction, your working capital is enlarged by the fact whenever you want to grow. So the more you grow, the more your working capital
Right.
grows. And that's
Right.
less returning on cash flow back to the owners, which is hard for them because they have to then flip that same property over in 3 to 5 years. And
Right.
so they're leaving a lot of cash on the table out for a future buyer that they're not receiving. And so that's hard for them to kind of stomach. And so for us who are cash flow investors, it looks great because the first couple of years, yeah, you're a little bit tight, but the last, after a couple of years, your cash flow starts to reverse itself after having the AR and working capital plug done. and then it starts to look great from a cash flow perspective. But the long term horizon and having such a large working capital sometimes doesn't work with some of the larger PE guys.
Okay, okay. Um, so size of businesses, geographical location, are there any preferences or goes or no goes that you have in terms of what you would be interested in?
Yeah, so we're mainly focused on the Texas region, right? So
Okay.
Texas and maybe some neighboring states. But we feel like the growth mechanism here in Texas has a lot of runway, and so we are primarily looking towards those areas.
And what size of business are you looking for? And what are some of the characteristics that are going to be important to you in terms of the management team, in terms of the infrastructure, in terms of, the dependency that the business might have on the current owner founder? What are some of those characteristics, and how do you manage through that?
Yeah, so for our first one, we are very specific about what we were looking for in that kind of regard. So the first one, we definitely wanted a management team. Definitely had some kind of structure and presence, some kind of girth to it. So, we were looking for things that were, above, $10 million in revenue and,
Hmm.
above, $2 to $3 million in EBITDA that we could
Right.
support a management team. And we found that in our first acquisition. And now we're putting all the foundations in this one acquisition we already did in terms of software and stuff like that, that we feel like we don't have to be so nailed down in the future acquisitions. So we
Hmm.
could do add-ons pretty quickly, and they don't even have to be in plumbing. They could be in electrical, or they could be in HVAC. With some of the software we're putting in place in this company, we feel actually we could move down, not downstream a little bit, maybe even look at acquisitions that they had less than $1 million of EBITDA, and had maybe less than $10 million of revenue. And so we're actually looking at a couple right now, and we feel like they would tuck in very nicely to what we're looking at.
Um, in terms of transaction structures and in terms of owner's involvement post sale, how are you thinking about that? Are you wanting an owner to roll some equity and to stay involved, or if it's an owner that's in his mid 60s and he's wanting to sort of transition out as quickly as possible? How are you sort of managing both of those ends in terms of younger owners that want to roll some equity and stay involved, and older owners that might be looking to transition out as quickly as possible?
Yeah, we're flexible. So I think there's not a one size fits all here. Every single person is individual and has their own circumstances, and so we're flexible on that. Depending on if they're an older owner and they're like, listen, I've had a great 30-year run, and
Hmm.
I've got probably 6 months left in me, but I kind of want to be 100% out in 6 months. Great, let's talk. If you're a younger owner that's just got started in 2 or 3 years and you see the upside coming, and you're like, I don't really want to go, but I need someone to come in here with a little bit of foundation and be able to put some structure and process into what we're doing to try to raise margins. We're happy to talk as well. It's hard to just say we are this,
Right.
because every single person's an individual and every seller is an individual, and not a there's no broad strokes that work for every single one person.
Yeah, and in terms of transaction structure, in terms of the cash component, in terms of a seller note, in terms of an earnout, in terms of rollover equity, do you have any hard and fast guidelines in terms of how you're going to structure the transaction itself, or are you flexible in terms of what the seller is wanting to accomplish also?
Yeah, I would say the only hard fast thing is over time we would like to own 100% of it.
Right,
And so that gives us a lot of flexibility near term, because they may say, hey, I want some distributions for the next 2 to 3 years. And
right.
then I'd kind of like to maybe sell the rest at a predetermined multiple. Or they may say, hey, I kind of want to cash out most of my chips now, and in the next year and a half, I want to be paid back, but I'm willing to hold a seller note for long term, and as a guaranteed kind of position of debt. We're happy to do that as well. So once again, it's hard to say there's a
Yeah.
hard fast here, except for the fact that over time we would like to own the whole thing. and we would just kind of structure it towards that way.
From the time you make the initial offer and the offer's accepted, getting through whatever financial due diligence, quality of earnings there is, getting through the other due diligence pieces, getting through the legal period from the time an offer is accepted until closing actually takes place. What are you usually finding that timeline is?
Yeah, it's usually for us about 4 months to five
Hmm.
months, and that's about as quick as you can do it.
Hmm.
We're trying to get it down to 3 months, but it's hard because, well, it depends on how many parties we have involved, I should say.
Right, right,
If there's not financing, we could do it a lot faster, but banks don't move as fast as as we tend to do.
right, right,
Once we get an LOI out, we're in the middle of due diligence within days. And then it kind of comes back down to the owner as well, how fast they want to move. There's a lot of stuff we require as part of due diligence, as I'm sure we're not alone in this category. And for a first time seller, sometimes that's a little daunting. There's over 100 pieces of information we need as a buyer to kind of make sure that we have done our due diligence and we can sign off into our appropriate constituents. So, you know, to be able to drum up that kind of support is a little bit tough. And
yeah,
so, they it does require the owner to be on their game, to be able to pull stuff whenever they want to pull stuff, to be able to have a good knowledge of all aspects of their business and not just kind of throw their hands up and say, "I gave you three bank statements. I think we're good." It's a
right,
little bit more
right,
than that, and so if they're prepared and they have good documentation and they understand their business, then it can go quicker. If
yeah,
they're if they're just, barely wading into the fields of, maybe I think I want to sell my business, I'm not 100% committed and I'm not going to take any extra time to be able
right,
to get the documentation, then
right,
it's going to take longer.
right, right, right. Um, at what point in this, 3 to 5 month process, when does an owner typically let the employees know that there's going to be some sort of transition here, and there's going to be a new owner, and benefit packages and compensation and potential employment agreements? When is that sort of brought into the the larger employee base within the company?
So there's a couple different ways that the owners kind of structure this, and it depends on the owner. Once again, each person's kind of different. Sometimes the owner has been making broad comments across the organization that he has a limited
Right.
time window, and he's
Yeah.
not going to own the company forever. And those are usually the statements that he starts making, 6 months to a year before he's getting ready to sell the business. And so everyone kind of knows, all right, there's going to be a new owner come on board. Um, and then it kind of depends on the executive team. Sometimes the owner is very close with their executive team, and they let them know early on in the process, "Hey, I found a buyer. I've done an LOI. I'm committed to sell. You're going to have to meet with the new owner. We want to get everything out in the open, not to the general employee base, but to the management team at least, fairly early on." And there's some owners that literally tell their employees and their management team the night before we close.
Right.
And that's
Yeah.
not a great scenario, but to them,
It sort
nothing's
of
certain
catches
until it's
it
certain.
catches everyone by surprise under that scenario.
It's true, but you got to remember, these owners are some of these owners are very close to the vest on a lot of their personal stuff, right? And the business is
Yeah.
business, is
Yeah.
personal is personal. And so for them, it's a risk versus reward. Well, they all hear all these stories of all these busted agreements at the 11th hour because some
Yeah.
firm
Yeah.
couldn't get comfortable with what, and so they don't want to introduce change or risk to their operations. And so I get why they do it. They do it because they're concerned about making sure that the business is running, optimally, and they don't want to disrupt and introduce change. And so that's why they keep it till the end, is because they just don't want people focused on that. They want people focused on making great products.
And so you're buying the operating business. What if they own the real estate that they're running the business out of? How do you handle that as part of the transaction, or do you not get involved in the real estate at all?
We typically try not to get involved in the real estate. So most of the
Okay.
times we'll say, let's do a lease back. You can still own the property and all that kind of stuff, and lease it back to us. That's not our specialty. We're not real estate people. Our value is not derived off the real estate. But let's also make it comfortable for you that we're not leaving tomorrow. We're going to be here for a while. We're going to grow into this thing, but it also gives us in the business a little bit of flexibility as well. As if we grow enough and we outgrow the facility, we're not tied to that facility, and all of a sudden it has a new kind of complication added to it, and that we have to get rid of the real estate and find a new place.
Right, right. And do you envision most of these businesses in their local market, they'll keep whatever name the business has been operating off of for years, or is
Of
that
course.
name at some point going to fade away and your holding company name is what the business is going to be known as?
No, we have no desire to have our holding company be the name of the business. We always have the kind of frame saying, you change the name on the front door and all your employees go out the back door. Um,
Right,
so, we want as little as change as possible coming to the business day one through day 90. If we can hold change to a minimum, then I think that makes everyone easier and lets everyone kind of breathe and say, okay, this is, because the first thing everyone hears when they hear that there's a new owner, eventually they all hear, is what does this do for my job? And it's
right.
right for them to think that, is because that's the
100%.
that's the mechanism they have to be able to have an earning and be able to support their family. And if you
Mm-hmm.
introduce a whole bunch of change day zero or day
Mm-hmm.
one, when you're coming in, it just adds to the anxiety level of these employees and doesn't let them focus on what they're doing great, which is why we bought the business, which is, commercial construction and performing a great product and quality.
And how many acquisitions do you hope to do over the next 3 to 7 years? And are you building a holding company and you're wanting to sell that at a future point, or are you building it where it can maintain great cash flows and it's going to be just a dividend distribution machine for you? Which one of those two paths are you headed down?
We are a holdco for a reason. It's because
Got
we
it.
anticipate holding for the foreseeable future. We have no designs to sell, to take off properties, to take off assets. We are planning on having these assets forever. One of the pitches we have to our founders is if you sell to one of our competitors, it's great. You might get another turn or two, but guess what? They might also have another owner in a year and a half, and that owner may not have the same loyalty as we do. And so we are very specific when we talk to owners that we are in it for the long haul. When they sell to us, that is a sale that we're going to try to keep their legacy going. We're not going to change the name. We want to keep the great things that they had going. We want to be able to
Right.
continue to make great. If there's a couple things we can nibble around the edges on and rough out some smooth corners, great. We'll try to tackle those as well. But we're not here to try to flip the company every 3 to 5 years, and then all of a sudden, all the great people that you hired and have invested in are all of a sudden, doubting their future with the company every couple of years.
And um, outside of price and deal structure, as you're talking to sellers and convincing them that you're the right buyer for the business and the right steward of the business going forward, is that the main point that you're driving with them, is you're not going to be flipping this thing in 5 years, you're here for the longer term, you're going to protect the legacy that they've built and take care of their customers and take care of their employees? Is that what your sort
Yeah.
of value prop to them is?
What I call it is we're trying to establish real quick a relationship of trust on
Hmm.
both ends. And if we trust each other to kind of both operate in the same kind of commitment level, then it works. If we find that people somehow are violating those levels of trust, either us or them, then the deal falls apart real quick. And and this is also why we kind of have a strict rule: unless there's something massive, we don't retrade, um, because that also destroys trust. And we see a lot of people, coming in, obviously trying to make a quick dollar, and they'll get down to the 11th hour, and unfortunately the owner's already spent the money three times over, and then they retrade.
Right.
And
Right.
it's just a horrible process. Like, how are you supposed to have trust when that's going through and be able to, turn to your employees who you've nurtured for the last 5 years and say, this is a great guy. He's going to take care of you. No, you haven't taken care of the owner through the process. What makes you think you're going to be able to take care of the employee? And so that trust factor has to stay high. And so unless there's something egregious, we're a no retrade shop. If we give you an LOI, that's the LOI. Now, of course, if there's something fraudulent in your financials, so once again, that
Yeah,
destroys
that's
trust.
yeah,
And then
yeah.
most likely we'll probably back out more than try to retrade you because we are operating on an element of trust. And if that trust is broken on either side, then either side should break up the agreement.
Yeah, yeah, yeah. Well, awesome, awesome. So if there are any final points of wisdom that you would impart upon potential sellers that are thinking about selling the business, what are the top two or three things that are the most critical from your perspective of making the business as attractive as possible to a potential buyer like you?
Yeah. So number one is have a great quality product. Out in the marketplace, people all talk. If you're just doing things and do things and taking, cutting corners and stuff like that, that's not going to work long term because we're trying to build off the quality of the product. So number one is maintain your quality as you're going through the sale process, and also before you're getting to a sale process, make sure your quality is strong.
Hmm.
Number two, be committed to a sale. Sometimes we see sellers who are like, you know what, I really do want to sell. And then at the 11th hour, they realize this is their baby they put all their time and effort into. And they're not really ready to sell. They just want to kind of see what the number was in there. So the other one is be committed to the process. If you want to sell, sell. If you don't want to sell, then don't waste a lot of people's time, including your broker, including us, including everyone, our bank and your bank and your
Right,
advisors, like, and your family, like, be in the process or be out of the process.
right.
And that's I know that's easy to say on my end because I'm the buyer. And I've sold a couple properties as well, in the past in the fintech world. But you have to be committed to the sell. And if you're committed to the sell and you're committed to the process, then things will go better than if you're in or out.
Well, that's awesome. That's awesome. Well, Chad, thank you so much for your time. This has been very informative. So, um, HVAC, plumbing, electrical within the Texas region, willing to take some construction exposure. Are those the main characteristics that
We prefer
our
to take construction exposure.
prefer to take is? Yeah,
We don't want services companies. We're not looking for services companies. If you have a service company and you're looking to sell it, there's 5 billion PE shops who want your business. Go have fun.
right. Right, 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 right. Well, that's great. Thank you so much for your time. And if someone wants to get in touch with you directly, I can put the contact details in the footnotes here, and they can reach out to you directly, or they can come through us, and we can facilitate a conversation as well.
Either way, love to have people come to me directly. Chad at lionshield.com. Happy to have you email me, if you just also, we do help, sellers and searchers together to be able to kind of find a marketplace. So
Yeah.
if you're either a seller or a searcher or a holdco or looking to get into it, happy to devote time. We're just here to kind of help the process work better, and if we can help make the process better on either end. So if you're just even thinking about it, let's have a conversation on either side just to kind of help you out.
Well, that's awesome. Thanks so much for your time.